Welcome to Channel AMEC, your insight to the Australian visa system. Good day everyone, my name is Carl Young, your online YouTube visa consultant. Are you interested about migrating to Australia? Why don't you consider to subscribe to our channel and turn on the little bell on the side so we have all the updates and you will be the first one getting all the insights. Now this video will follow on from the previous video in regards to the 1AA Business and Innovation visa category, which has just been updated with the new policy and regulations and requirements. So I would like to take you into look into the detail of the investor stream. So it's one of the most popular used business visa because previously investor stream requires one to invest 1.5 million into a state or territory government bond and stay there for 4 years in order to transfer to a personal to a permanent visa, not personal visa. Sorry. Now, as you can see, today is the 1st of July 2021. So the first thing I notice is here, this provisional visa required to invest at least 2.5. So it has increased as previously advised from the Minister of Immigration, Alex Hawke, from 1.5 to 2.5. Now, the 2.5 now does not require to invest into state government bond anymore, but now it requires to invest into other category of stuff. So I'm going to take you into that detail there and compare a little bit different between previous pathway and the current pathway. So let's have a look at the overview. As you can see, it has been updated from previously 4 years and 3 months. Now it's 5 years. Now I recall the requirement to transfer into a permanent residency will reduce from the previous 4 years with the government bond to now 3 years with what they call compliant investment category. So I'm going to take you detailed there. Now the processing time, as you can see, is a little bit shorter than 1AA, but it's still 25 to 32 months. That's crazy, but this is all caused by, obviously the pandemic. But anyhow, let's look into the detail, which is right above my head right up here. Okay, let's have a look. Okay, you must be nominated by a state territory government. That's pretty sure, and we are lodging on after 1st of July. You cannot even literally lodge on 1st of July. The reason is because no state and territory government is now open to accept any nomination at all. Anyway, it's gonna be 2.5 million rather than 1.5 previously. You need to score 65 points, and from our experience, generally most of people won't have less than 65 and have a net business investment personal asset of at least 2.5 million. Now previously was 2.25. So let's jump into the actual detail of eligibility. Now you need to be nominated as as what it says, by the state and territory governments. Now the second part is own and manage business and personal asset investment. Now that's basically the same as previous. Okay, so you must have manage a qualifying business. So can it be a business or an investment portfolio, meaning like stocks, management funds, cash term deposits, real estate properties for value of at least 1.5 million. So that's the same as previous. So for at least one of the 5 fiscal years immediately before you apply, okay, you need to have at least business ownership of 10% or 1.5 million owned by you and your partner, managed under your management. Okay, and your asset requirement for 2 fiscal years immediately before you apply, it's been increased from 2.25 to 2.5. Now that's not much of an increase. I'm not too sure why it's 2.5. It's 250,000 differences. That's not much as for an investor. Anyway, that I think that's a incentive as well. So those of the stuff doesn't change much. And this asset has to be lawfully acquired and transferred into Australia within 2 years. Now, invest into Australia. Now, this is the big part. If you were invited, apply on after 1st of July 2021. Okay, now the 2.5 million needs to be invested into the following proportions. So first one is 500k into VC, venture capital, or private equity funds that invest into startup and small private companies. Okay, and the 750,000 to the approved managed funds, and these managed funds must invest into emerging companies listed in the Australian Stock Exchange. Okay, so basically you need to find a very good fund manager. Okay, should I say? Okay, a balance of the rest of a balanced investment of at least 1.25 million to be in managed fund. So that can be anything else, but it says the managed fund can invest in a range of assets, including company listed in the stock exchange, Australian corporate bonds, annuity, and commercial real estate. We prohibit direct investment into residential real estate. So you cannot use a managed fund and then invest into a house and land. You cannot do that. We restrict limit indirect investment in residential property through managed fund as well. So you cannot do that as well. So they just don't want the money to go to property. End of story. Okay, no property investment. You must not use investment as a security or collateral for a loan. So you cannot, because previously under the SIV a couple of years ago, some bank, okay, they take your investments and then they loan them back to you. Anyhow, that's how they had treated before. So they don't want that to be happening anymore. So with this prohibition, I think you cannot touch residential property, but you can do commercial. But the problem is 1.25 to invest into commercial. It's probably too slim to do it anyhow. It can be done with a REIT, but that's going to be a group of different other acceptable real estate, commercial or industrial investment there. So that will be acceptable, but residential real estate, no, cannot do it. Cannot do it directly, cannot do it indirectly. Okay, it is suggested you review more information on compliance significant investment and available on Austrade guidelines. So I'm not going to go into the detail, but the general information is right here. So 500k into a VC and 750k into managed fund for that can go to a stock exchange for emerging companies and things, and the balance can be into a managed fund but prohibited for direct or indirect into real estate properties. So that's end of story. Now you must also have a right experiences, so that stayed the same. 3 years of experience of managing one or more qualifying business or eligible investment. So that's the same as what it had previously done. And again, the point test, I'm going to take you into the table and then intend to live in that specific state, and the rest is the same. So functional English, health, and character. So let's jump into the points table now. We will review this once more as what we have done previously. If you have seen it in 1AA, you might want to skip this part. So age 18 to 24, 20 points, 25 to 32, 30 points, 33 to 39, 25 points, 40 to 44, 20 points, 45 to 54, 15 points, and 55 above 0. Now English, if you have IELTS score of 5 across 4 bands, you get 5 points, or 7, you get 10 points. That's pretty high. Education wise, if you have achieved or completed a bachelor or above in business, science, or technology, you get 10 points, or other than that, you get that 5 points. Perhaps you may have certificate only, but it's still, as long as it's recognized by the Australian institution. So financial assets, that's between you together with your partner, and that's between together with your personal and also business assets. Altogether 1.25 mil, you get 5 points. 1.75, you get 15 points. 2.25 mil, 25 points. 2.75 mil, you get 35 points. And if you have business, as long as it turns over annually more than 750,000, you get 5 points. 1.25 million Australian dollar, 15 points. 1.75, you get 25 points. 2.25 mil, 35 points. As we are focusing on the investor stream, so you need to prove that before you're being invited, immediately before invitation, that you held eligible investment of at least 250,000. Okay, investment, that's not much for an investor. 4 years, 10.7 years, 15 points. Business innovation qualification. Now, I've done this before, but if you do have patent registered design things, you get 15 points. Trademark, again, has to be international recognized, cannot be a local trademark. That won't count. That's 10 points. Ownership of the participant in business that is in a JV with whatever the business that is. Generally, that's a pretty large capacity. People are talking to JV. That's 5 points. So, and again, if you had that kind of person, probably won't stick into this kind of visa, but doing something else. You've had ownership interest of more than 50%. That's dealing with export trade. You get 15 points. I think a lot of people fit into this requirement there. Ownership interest within the last 5 years, and that 5 years, you can prove that within the 3 consecutive years, every year has a 20% growth. Now I think that's hard, okay, especially with that the current situation with pandemic, and you need to have 10 people working there. You get that 10 points. And the last one, at least, you get grants from your home country of 10,000 for a startup, or perhaps a VC fund to you, 100,000. You get 10 points, and maybe you want a special endorsement. But from the years of my practice experience, I haven't ever seen people actually get that done. Now, I'm gonna take you into a detail of a law here, because there is a debate in regards to how the 1AA changed from designated investment into compliant investment. So how would that difference? Because if you read on compliant investments, what it requires from the SIV, it doesn't have to be derived from the earnings that you made from business or investments. As long as it's lawful, it's done, because it can be inherited. But let's jump into the actual law and see how that actually been worded. Okay, now this is the legend come, which generally all the agents or lawyers will access to it. General population won't. So they still have that designated investment meaning there, but that's for previous previous law, should I say. Okay, let's go into the investor stream part, and I'll explain each by each. So here we go. So 188.24, it's the criteria for investor stream. So again, all of that basically says you need to be under 55 and get that 65 point from the point test tables. Now you gotta be successful, either investment or business, and you have 3 years of managing experiences there, and demonstrate high level management. So that's all being explained pretty simple in the immigration web page. Now moving on, 188.244, it says that for at least 1 or 5 fiscal years, you need to be at either involved into business. That business requires to have at least 10% of the share that you own it, or you are in the portfolio of having investments, and that investment has to be after 1st of July. It used to be 1.5 million here, now it's bumped up to 2.5 mil. Okay, so that means your investment portfolio needs to demonstrate that you are not just managing investment portfolio of 1.5 but $2.5 million worth of assets of investment there. Okay, now 245 here, it says your assets used to be 2.25, now your asset needs to be 2.5 mil. So that's as explained in the website. Now this is the part that we are looking into detail, 188.246. As you can see, there's 188.246A because that's a new one. Okay, now that's obviously before July, so let's don't look into that. That's talking about 1.5 going into the government bond. Now 246A is the part that has been majorly reconstructed. Okay, let's have a read. At the time, it's you're being invited to apply after 1st of July 2021. Requirement in subclass 2, 3, and 4 are met. That means 2, 3, 4 all required to be met. Okay, so 2 is that has made and compliant investment, significant investment at least 2.5 million, and genuine intention to hold qualifying for the whole visa period. Okay, now from my recall, it should be at least 3 years in order to transfer into permanent residency. So that's the advantage coming from the old scheme, because the old pathway required to have that 1.5 sitting there for 4 years, but now 3 years. The fund used to make compliant investments mentioned in 2 were accumulated either or both of following. Okay, how can you accumulate this 2.5? This is a key. Now, one or more qualifying business conducted by applicant or applicant spouse or de facto partner, or applicant and applicant spouse or de facto partner together. Well, that's very wordy there, meaning that it has to be derived from business, or eligible investment activity of applicant, applicant spouse, de facto partner, or applicant and applicant spouse or de facto partner together. Okay, so that means 2.5 million has to be generated as profit, net made from either investments or businesses. Okay, it cannot be inherited like how they have done it for SIV $5 million investments. Okay, so you need to show that you have made these profit, 2.5 mil Australian dollars profits from that, the investment in the business or the business. The applicant has given minister compliant investment, blah blah blah, and complete the form, and that's all done. So that said, that is actually the actual meat ingredient that has been changed from the previous differences between now. So what is your thought? Now 1.5 net profit was alright, but now they bump it up to 2.5. Now I was estimated at $2.5 million. What does that require to be demonstrated from derived from business or earning from investment? But now it looks like they are still sticking to that rule. So don't know, see how that goes. What is your thought and what's your questions? Feel more welcome to leave a comment right down below, and see you next video. Goodbye.